Welcome to ForexTV.com. It's Wednesday, February 20th. I'm Remy Hookey for your New York Forex Market Buzz. In afternoon trade, as of 12:15 Eastern Time, Euro dollar is at 1 and 46.85. Sterling dollar is trading at 1 and 94.20, while dollar yen is at 108.19. U.S. equities are back up on the day and have pared back earlier losses. Earlier today, the Labor Department reported that CPI rose 0.4% last month, which was higher than expected. Core CPI was up 0.3%, the largest gain in 7 months. Meanwhile, the Commerce Department reported that the construction of new homes increased 0.8% to a seasonally adjusted annual rate of 1.0112 million in the latest month. This follows the 14.8% tumble in December. And building permits declined 3%, the lowest since November of 1991. Today I'm joined by Jamie Coleman from Thomson Financial's FX Hub. Good afternoon, Jamie.
Hi, Remy. Good to be with you.
Thanks for joining us. Well, in afternoon trade, we're seeing the majors calmer after this morning's action. Today's U.S. data put the spotlight on higher inflation and the Fed's next move at its upcoming meeting on March 18th. And also the building permits figure pointed to signs that we have yet to see a bottom in housing. But taking a breath before this afternoon's FOMC minutes, let's start out with a euro dollar. So technically, what is your forecast for the pair?
Technically, I see a bit more range trade ahead. Yesterday, we traded up nearly to the 61.8% retracement of the recent drop from 149.50-ish down to 144.10 or so last week, and we were traced about 2/3 of that move, and then fell pretty spectacularly overnight. Came down, close to 146.15 or so earlier in the day. So I think we may have put in a near-term top, perhaps for the rest of the week, and we could see a bit more sideways trade through the weekend.
And moving on to the Japanese yen, in New York afternoon trade, the major indexes are back up, and we've seen quite a turnaround on the day. Dollar yen currently hovers around 108.20, while euro yen has also gained. So, Jamie, if you could tell us what's contributing to the gains in equities and also your near-term yen outlook.
What we've heard in the last few minutes in terms of the equity gain is there are unconfirmed reports that the FOMC minutes were leaked. We haven't seen any evidence of that, but if that were the case, I would suspect that they were quite dovish. But I don't think that's really would be much of a surprise, given that we heard from Bernanke late last week, and he was very downcast on the economy. All indications are that they'll cut 50 basis points when they meet in mid-March. So I would expect the minutes to be on the dovish side. We also get economic forecasts from the Fed staff this afternoon. Perhaps they will be downgraded as well. So that might put a little pressure on the dollar and support stocks from the interest rate perspective. But too much weakness tends to you might get a bit of a short covering rally, but it's hard to sustain rallies while the economy is still looking quite as vulnerable as it does at the moment.
Well, that's an interesting rumor. And now let's move on to the sterling, which has pulled back from weakness in the morning session. Sterling dollar fell to see a low of 193.62, and we also had the BOE minutes. But looking ahead, what will drive the UK currency?
Well, I mean, the focus is still very much on the financial sector in the UK as a whole, be it the housing, the slowdown in the housing market, which is impacting the banks. The mortgage market in the UK is in many ways analogous to that in the US, with subprime lending and not the most rigid credit standards being employed during the latter part of the housing boom in the UK. So I think you will have markets looking very, very closely at every anecdote coming out of the housing sector. As well, there'll be a very, very close focus on bank earnings. This morning we saw Alliance and Leicester come out with very poor earnings. Their stock was down something like 30%. It's at one point this morning, fears of other Northern Rock type blow-ups in the mortgage lenders in the UK are out there, and you also have a very soft commercial property market in the UK at the moment, which is contributing to earnings problems at the big banks. So the pound looks like it will. It may be due for a short-term sort of short covering rally, but we really can't see it getting back above, say, 196, 196.50 or so. It's very heavily entrenched in a downtrend at this point. And I think if we break through the 193.40 area that we saw in the latter part of January, we could have significant downside, probably towards the 190 area in the not too distant future.
And last but not least, let's take a look at the dollar block currencies of the Aussie and the CAD. Jamie, are you bullish on the Aussie and bearish on the CAD?
Well, it's hard not to be bullish on the Aussie, given the enormous interest rate differential that it holds over virtually every currency around the globe at the moment. The economy's firing all cylinders with commodities booming. Exports to China just are absolutely on a tear. That said, I mean, we are in overbought territory. There's always a chance for pullbacks because the market is very one way at the moment. You know, it seems as though everyone is long Aussie and short Canada. As you say, those two. If you're a dollar block trader, that's sort of the natural play. So I think you have to be cautious about the levels that you where you initiate these trades. But I would tend to be more bullish on Aussie than I am on Canada. Though Canada at the moment, with oil near $100 and with gold near record levels, it's hard for me to be extremely bearish on Canada, despite the odds that the Bank of Canada will cut rates next time around. I mean, our thinking is with a new Bank of Canada governor coming in, it's unlikely that his first move would be a particularly aggressive rate cut of, say, 50 basis points. We're thinking that he will take a more measured move, at least in his first act as governor. So my feeling is dollar CAD might be a little bit overdone to the top side at the moment. There could be some M&A, an M&A component into the dollar Canada bid at the moment, and once that is dissipated, we have a feeling dollar Canada will come back towards the 100 level. That's really acted as a pivot point for the last month or so, with the dollar trading about 150 pips either side of that 100 level for quite some time.
Okay, Jamie, thank you very much for insight and analysis into the Forex marketplace.
Anytime.
This has been your Forex Market Buzz with Jamie Coleman from Thomson Financial's FX Hub. I'm Remy Hokie. Join us later this afternoon for PM Exchange right here on ForexTV.com.